impose strict import controls on rare earths ahead of the U.S. talks. At the negotiations going on, and China's trying to have leverage in the talks. It was Thursday, the day the S&P topped. The Trump administration didn't respond very kindly, and Trump threatening a 100% tariff in addition to what China is already paying starting November 1st. Also impose export controls on any and all critical software. And China cannot win a trade war with the United States. China needs the U.S. consumer. They're trying to have leverage going into these talks. Not going to work. China needs the United States a whole lot more than the United States needs China. Their country is already falling apart economically. And if they keep playing games and the U.S. ends negotiations with them, which I think they should do, and just put the tariffs in, because China has a history of cheating. The Communist Party, they cheat, they lie, they constantly break their word. We found this out the last time around in 2018 and 19. Make negotiations and then they don't keep, they make deals, they don't keep them, they lie, they play games. They're communist. Treat their own people like garbage. They have human rights violations. They treat the Chinese workers horribly and give them no rights whatsoever. There's no way to enforce to know that they're not going to cheat. I think you should just put the tariffs on them and be done with it. I also think you should wake them up and delist Chinese companies off the U.S. exchanges. I think that would wake China up. You want to go into a depression? You get to go into a depression. These people cannot play the United States. The Communist Party doing exactly what I said they would do. Yesterday, I went into it in great length of detail. I said you would see counter measures. You would see retaliation. What are they doing? They're retaliating. And again, we have these new port fees, escalating trade tensions. China put sanctions on U.S.-linked Korean shipbuilding firms as the port fees kick in, as these tensions continue to escalate. These are U.S. affiliates. So this rattled futures. Trade tensions continue to escalate. Recovered off of the lows. So the future saw off sharply, and then the market gapped lower as China's re-escalates trade tensions. Now ended up recovering and going positive. We were still down on the NASDAQ and the S&P, but not at the lows. Then tensions heating up even more. Trump is now threatening China with cooking oil embargo over their soybean snub. We saw China play games with the tech companies. Now they're playing games with the U.S. farmer, not buying soybeans. They should just put the tariff on and use some of the money to help the farmers. China's just playing games. That's all they know how to do. But you mess around, you're going to find out. China's going to find out. They can't win a trade war with the United States. They need to go in good faith and make a fair deal. Not play games, not try to hurt the U.S. There's a huge trade imbalance with China. Why they can't win a trade war. They really think they're going to play the United States? I doubt it. Again, I told you, we had several accounts yesterday on social media. It's over. It's a one and done. One day it's over. Loss done. It's just getting started. And I told you China, I went into great length of detail. China is going to respond. You get more games out of China. You're going to get counter measures out of China. You're going to get a retaliatory tariff out of China. This is what the Communist Party does. Play games. I had the Dow down with futures. The Dow was down with futures. It ended up positive with the Dow cash up 202 points. The S&P up 0.44%. By the way, the S&P gapped down, ended up trying to recover. We didn't close at the lows, but you still ended down by 10 points, which the VIX correctly predicted. The VIX predicted we were going to get a down day in the next two sessions. The VIX got it right. Friday, the VIX predicted that we were going to have an up day, Monday or Tuesday. The VIX was right. We had the big rally up, trying to rebound off of Friday's sell-off. The VIX was right about the sell-off that we got on Friday because it was above the 50-period moving average. The MACD in positive territory, predicting volatility was going to begin to increase. The VIX was right. The VIX continues to nail it if you know how to read the VIX. NASDAQ down 0.76%. The Russell was up 1.38%. The VIX was up 9.35% to close at 20.81. I told you not too long ago, we are overdue. We are overdue for Trump to rattle markets with the tariffs. But in reality, is China playing games ahead of the trade negotiations, and is Trump reacting to that? But again, you likely have more of this. Expect more, as I said yesterday, expect more out of China, expect retaliatory tariffs, expect more retaliation going into the negotiations. Why, at some point, the United States might just say, forget it. And what do you think the stock market's going to do if that happens? Forget it. We're just going to impose the tariffs and that's done. Negotiations are over. What do you think the stock market's going to do if that happens? And I'll tell you what, that's what I would do. Because you're going to make a deal with China and all the Communist Party, they're just going to keep cheating. It's what they did in 2018. They make deals, they lie, and then they don't keep their word. At least with the tariffs, they can't cheat. One of the problems is what's going on with China already. Again, warning, we're likely headed towards a global economic slowdown. Recession is coming. The recession indicators are flashing. And again, a slowdown in China is probably one of the first slowdowns that we're, again, moving towards a global economic slowdown. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you take a moment to do that, partner with me. You can step up to the plate and help out at this time. I would really, really appreciate that. I thank you for your consideration for that. Just ask that you partner with me rather than getting sponsors. I don't want to sell you anything. The VIX. Black candlestick today. Again, we've broken out here, gotten above the 200. We're still above the 200. We're still above the 50. When you're above the 50 on the VIX, bad things happen on the S&P 500. The VIX MACD is in positive territory. This is not good. This is what happened. Let me just shrink this down to size here. This is what happened when we saw the sell-off of 21%. We saw the volatility sharply increase. That's what we're seeing right now. The bands are tight, telling us something's about to happen. MACD is telling us something's about to happen. Now we got a black candlestick today. You could try to backtest more if we try to get a bigger counter trend on the S&P 500. Through the crash signals the very day of the top, warning you that the crash signals were flashing, followed by the Friday sell-off. Try to review more of those signals later this week. Powell speak today, opening the door to more rate cuts here. Again, you got the economy shut down here, and that's not going to be opening until at least after this coming weekend. Maybe shut down for weeks. But Powell is now talking about ending quantitative tightening. Oh, who told you that was going to happen? It was coming. If you didn't watch my video, past weekend I went through and I showed the similarities between 2007 and our current S&P 500 right now and everything that's going on. The government shutdown, with everything going on, we're likely going to see the Fed starting to cut. My guess is by January they're going to be panicking, maybe just before that, at the December meeting. But I think you're going to see the Fed panicking if the market is topped, if we see evidence of that. Turning off major resistance with Bitcoin. We're turning off major resistance with the S&P and the NASDAQ. You got a good shot. Now, if you want to see the 4-year cycle on Bitcoin, Bitcoin has these 4-year cycles. Well, it's all suggesting that a Bitcoin top in October. I made a video about it. I'll link it at the end of this one. If Bitcoin is topped, we could have seen a top with the S&P and the NASDAQ. That is very possible. Talked about that in great length and detail. Just got the first cut after a long pause. Last time, 17 days later, the market peaked. Here, 16 days, 16 sessions later, the market peaked. I talked about that in great length and detail. Watch that video if you didn't watch it. I talked about how it's 2007 all over again, looking for evidence. Either we have a top or we find a bottom for wave 4 and we go get one more rally, but we very well may have topped. And if Bitcoin has finished the 4-year cycle, then it's very possible we're topping out with the stock market as well at major resistance. While talking about bringing quantitative tightening to an end, it's telling us we're getting closer to recession, and then the Fed will do more cuts, and eventually the Fed will panic. When we see Bitcoin collapse, when we see the stock market collapse, the market hopeful that we're going to get these cuts out of the Fed because they believe that the cuts are bullish, the cuts are bearish. I showed that in that video. It was talking about it's 2007 all over again. Cuts are associated with the bear markets. 2020 and 2021 were an outlier. A crash for 3.5 weeks during the pandemic, and then we had a brief recession. The Fed do QE 2.0. And we had the government do $5-6 trillion in stimulus checks, and they gave us all this inflation. Always be careful when the government says, I'm here to help. They usually make a bigger mess of it than had they just let the recession happen. I told you to be watching the intraday charts to see if we rejection at the 200 period or if we tried to get back above it and get a bigger Fibonacci retracement. We ended up getting rejection. We gapped lower, but we tested the low and we rebounded back up above the 200 and ended up getting above it positive for a little while, but then we closed down right around 11 points, but the 50 got back above the 200. Again, as I've said, we may be in backtest mode and get a bigger Fibonacci retracement, backtest of the May trend line that broke. Get a possible little double bottom pattern here. If the double bottom pattern plays out, then we challenge the highs. There's major resistance just turned off of at these two peaks over here. Both of them getting a gap and trap, gapping higher into resistance and turning off of it, gapping higher and getting a lower high into resistance and turning down off of it. This is the Trump sell-off right here with the 100% tariff threat on China beginning November 1st. I told you yesterday, if we attempt a bigger recovery, we can move towards the Fibonacci retracements. We're just here at moving into the 61.8 Fibonacci. You got your 200 period on the 15-minute chart ahead above that, and above that the 78.6 Fibonacci. All the while in the 60-minute chart moving back, trying to move back towards the 50 period here in our cloud of resistance, which again, that 78.6 Fibonacci right now, we're right there at the 61.8 Fibonacci. There's negative divergences set up here that broke the trend line from the September low. Cloud was support, the 50 was support, now the cloud and 50 are resistance. This trend line and the trend line from the May low. This is from the September low. But if we try to get a bigger rally, you can backtest this trend line, tag the cloud, and overthrow our 50-period moving average or move towards it. This is the S&P 60-minute chart. We had that divergence on the 60-minute chart. I just showed you the divergence back over here that gave us a sell-off. Friday we gapped higher, we got a topping tail, we got a lower high, and we had the sell-off. Now we're recovering. Yesterday we hit the 50% retracement just above it. We gapped lower. We got a bottoming tail testing the low here. And on the 60-minute chart, we moved higher to the 61, just under the 61.8 Fibonacci of this decline. Yesterday I talked about, again, we could see a bigger recovery into the golden pocket. Well, we're just under it right now. We're starting to turn off of there. If you move just under the 61.8 Fibonacci there, if we move into the golden pocket or try to reach the 78.6 Fibonacci at 67.18, again, you can get a bigger recovery and be in backtest mode. September trend line on the 60-minute chart of the May trend line, pretty close to that May trend line that we broke that I talked about over the weekend. I'll show it to you again. So just be aware of the Fibonacci retracement levels. And right now we're selling just under a 61.8 Fibonacci. If we end up setting up a lower high here or a little bit higher, watch to see if we come back and take out Friday's low. We had this decline on big volume. You got people saying, oh, it's over, it's over. It was a decline on big volume. It's not over. Here's a NASDAQ 60-minute chart, NASDAQ 100 60-minute chart where we're looking at it. Again, you had a divergence there. You went up to a rising wedge on the 15-minute chart. You slammed right into it with this high right here. You had a gap and trap. Here's the sell-off with Trump. You ended up dropping 3.5%. S&P on Friday dropped 2.71%. We had this bounce, a gap higher. Came back to fill the gap, didn't quite do it on a closing basis with the S&P, and then we rallied back up. Now we're getting a lower high on the NASDAQ. S&P made a higher high. Possibly they're diverging again. They diverged at the top. NASDAQ made a higher high. S&P made a lower high. Often diverge at turning points. If we get a bigger recovery on the S&P and NASDAQ, you want to be watching the golden pocket here as well. Again, the 61.8 Fibonacci, and this is a QQQ. Watch to see if we move above the high from Monday. If you do, we got the 61.8 fib directly overhead, the golden pocket between the 61.8 fib and the 78.6 Fibonacci. You want to be watching these levels. Up here, NASDAQ turned off major resistance, the upper boundary of the broadening formation and the upper boundary of a rising wedge. Now, before I leave this chart, again, I just want to say we might be experiencing ABC type of a counter trend where you get an A and a B and a C type of thing. It may not be done yet. It may finish at a deeper Fibonacci retracement. So keep that in mind. Same for the S&P 500. It might be ABC counter trend. And maybe they're done. Here's the S&P again, S&P 60-minute chart. Maybe they're done. Maybe they're not. Maybe they're done, or maybe they're not. Maybe it finishes up deeper. We could establish a lower high, maybe a successful back test at a deeper Fibonacci retracement. So keep that in mind. Some resistance on the NASDAQ that I just mentioned. Here's a rising wedge here with the rally up in September. We hit this upper boundary right on the nose there. And as I posted this chart right before the Trump sell-off, I was posting this chart saying, hey, we're going up and we're slamming up into this trend line of resistance. And right after that, Trump came out. We had this, 3.5% drop or so. 15-minute chart here. Again, you might get a deeper Fibonacci retracement, moving closer towards the 200 here, the 15-minute chart. And so we're hitting this resistance with our rising wedge, and that's slamming up into the upper boundary of the broadening formation. And I've warned you about the broadening formation before the sell-off ever started, again, that we were coming up into this resistance area. And again, previous peaks from July of 2024 and December of 2024, and now again here in October of 2025, that's formed a massive broadening formation. Every time you hit the trend line, you've had a significant sell-off, 16%, 26%. You've got this massive divergence going on with the MACD, with this move up here into that trend line. And again, the two scenarios are either we're peaking right here, and we're going to end up seeing the broadening formations set up, and we'll see a move back down, sharply down, test the April lows, or you're getting one more pullback followed by one more high. The final climax move, the final phase of the blow off top. Watching to see if we'll take out the 50-period moving average. If you do, then you're going to move back towards the 200 period. If we get a percent move similar to this, which was the smaller of the two, you're moving back beyond the 200 period moving average, as I've talked about. So again, question mark top over here, or do we have the top in right now? Don't rule that out. There's a very good possibility. We had no significant pullback whatsoever here. In the summer, we pulled back 4.28%. We didn't even pull back below the 50-period moving average. So you're at risk of a reversal or a deeper pullback followed by the final climax high. Again, talked about the possibilities of a top in the weekend video. Divergence is playing out. We're turning off at this level. People yesterday proclaiming it's over, still proclaiming it's over today. And again, it's likely just getting started. Signals have turned back to bearish. If we don't get back to the S&P, if we don't get a bigger Fibonacci retracement, or even if we do, again, if we start getting a lower high setting up here or a little bit higher, I want to be watching. Do we take this low out? You end up starting to get a lower high, lower low, and that starts pushing the 50 below the 200 period here on the 60-minute chart. And maybe you go lower, then get a bounce as divergences try to set up on the RSI and the MACD or something. But right now, in this hammer, going back, gapping lower, going back, filling the gap, and moving towards our 50-period moving average. Now, this trend line here, you got the one in the daily time frame. This is, again, from the September lows here. So if the S&P tries to go up and get a bigger Fibonacci retracement, you got the trend line on the 60-minute chart from the September low. This is a 60-minute chart with the Fibonacci's. And we've got our trend line from the May low. That's this black trend line right here. It's marked the bottoms with these more mild pullbacks that we've had on the S&P 500. You broke that trend line on Friday with the 2.71% decline. It wiped out a month's worth of gains in one big swoop. I warned you that could happen. You can wipe out days or weeks of gains with one or two bars very easily. Market is extremely overbought. We returned off of, and we're trying to backtest, and this is what I wanted to show you. We're just still under this trend line right here from the May low. Still may try to reach it, may even overthrow it, but you've got the cloud directly overhead in the 60-minute time frame. You've got that 50 period directly overhead. You got your Fibonacci retracements. That's why I'm taking the time to show you those resistance levels. This trend line break came on big volume. Let me flip over to SPY right here so you can see it. This is the S&P 500 ETF. You can see the volume sharply increased with that decline that we had. This is exactly what we had back at the February peak. The spike in volume here looks very much like the spike in volume. We began to see the volume spike, and then it began to escalate. With the first leg down, we got a little bit of a recovery, and then we began to see the volume escalate yet again, and eventually there was capitulation to produce that bottom. But again, you've got the spike in volume here. This thing is likely not over yet. Had it over here, but we didn't do technical damage. We've done technical damage here in taking out the May trend line. Over here, you did not take out the May trend line with this spike in volume over here. See, SPY daily chart. And I told you the break of the black trend line, you're getting a reversal off the upper boundary, the blue trend line, which goes back to the 2023 low, and the red trend line parallel here. If we take this low exactly from the April low, you have a parallel boundary. Perfect. If we include this shadow, it's perfect. You're slamming up into the red trend line parallel boundary. Again, that's why this could be an important turning point right here. Again, if I zoom out in the weekly time frame, I've talked about this trend line a long time. Again, the low from 2020, 2022, 2023, 2025, parallel to the upper boundary from the 2022 peak. You slammed right into it. The trend line from the 2023 low, you slammed right into it, and you're reversing hard. This channel, as I talked about in the weekend video, talking about a possible completing of the top here, this very well could mark a top here at this upper boundary channel line. The S&P doing exactly what it did back over here, forming this divergence. It ended up playing out and producing a sell-off after we took out the 50 period. Here we're resting on the 50 period, but we've taken out the momentum cloud. We've taken out the 10 period moving average. Those levels are now resistance. Massive divergence on the MACD. You've got a massive divergence on the RSI. Pullback, I'm looking at the cloud. I'm looking at the 100 period. I'm looking at horizontal support. I'm looking at the 200 period. If we see something similar to a 10% drop, what we had in 2024, like with the first leg down with the broadening formation on NASDAQ, if we see that on the S&P, well, that was a 10% drop on S&P as NASDAQ dropped nearly 16%. That would take us back to the 200 period moving average. It would take NASDAQ beyond the 200 period moving average. We're still below the 20 period moving average, trying to bounce off the 50. And again, we're below the 10. If we get another leg down and take out the 50, the 10 will cross the 20 period moving average. The momentum cloud is resistance right now at this moment. So is the 10 and 20 period moving average. And the momentum cloud has turned red into the future. 10% drop like we got in 2024 would take the S&P towards the 200 period moving average. Again, for the Elliott wave count, I have two counts. Move this count to my alternative count since we are turning off of the trend line that I've talked about in the weekly time frame off of major resistance. This is the alternative count. This says that we have an extended wave 3. We're now going to get primary wave 4. Primary wave 3 just finished last Thursday on the 9th, and we're now going to sell off, and they get one final push higher for the final climax rally, which would be the final phase of the final climax rally of the final phase of the blow off top. This whole thing is the blow off top, and it may be done. This is the alternative count now. You have a wave 1, a wave 2, a wave 3, an extended wave 3. You're now going to get 4, and then you get 5. Assumes we have not topped and that we're just pulling back. I've now moved this count to my primary wave count. Again, both counts have cycle wave 4 completing here, but this count says we've got primary wave 1, we got primary wave 2, and extended primary wave 3 with these intermediate waves here. You finish primary wave 3, you got primary wave 4, and then you get primary wave 5, it's rising wedge, and primary wave 5 completes cycle wave 5, and the top is in. This count says the top is in, and that we've now started the bear market. One of those two counts are likely going to be the case. Told you this was not the crash to give us the top because, again, I told you the move was corrective, A, B, C. Watching to see how this unfolds. If we get an ABC near the 200 period or support levels, then maybe you got a wave 4. It's corrective. You'll get wave 5. Could be starting a massive zigzag correction, a 535 pattern, or a massive flat type correction that, again, will go on into 2026, a massive bear market that, again, will likely go down, take out this low, and move towards the 2020 low, and either find support just above it or take it out. You have a head and shoulders pattern. This head and shoulders pattern that's setting up, I believe it measures to the high 2800 area. Calculated it out yesterday, but I didn't write it down. I should have. Again, if we see the head and shoulders formation end up setting up, you could see a massive correction with the head and shoulders that gives us a bear market going through into 2026, maybe even on into 2027. If the head and shoulders plays out, it measures down into this 28 or 2900 area. I think it's just below 2900. In the week, I'll get the exact number for you. The low over here, the 2250 area or so from the pandemic sell-off, we would come back and take out the 2022 low, and we would move towards the pandemic low and maybe even take that out if we get something uglier. Or again, you might get a lopsided pattern where you go beyond this low over here, the April low, come back up and go even deeper, a lopsided kind of a neckline or something. But I stuck this on the chart yesterday. This is just the measurement for just the high to the low right here. And this again takes us down into that 2800 area, just below 2900. Again, I'll get the exact number for you, but we start taking out the S&P 500's 50-period moving average here in the daily time frame. Again, the 200 periods near the 38.2 Fibonacci, 50% retracements at 5800. You got the golden pocket here, 5571 for a 61.8 Fibonacci, the 78.6 Fibonacci at 5245. So again, if we get a corrective move, it's only wave 4. It's going to be a more shallow retracement. Horizontal support or near the 200 period or 100 period moving average, a cloud of support. If we get something uglier, we watch it. We start getting a 5-leg push down, getting an impulse move, setting up a larger major corrective pattern to terminate the bull market. We could see sell-off bigger than the 21% sell-off over here. We could come back all the way down here towards the 78.6 Fibonacci or come back here and get a bigger sell-off and see the Fed panic by December or January. That's very possible. The market is topping at the resistance levels I'm showing you with the channel in the weekly time frame.